Welcome to News You Can Use, presented by Supreme Lending. News You Can Use offers timely information related to the housing and housing finance industry that we believe will benefit you and your customers. This is News You Can Use.
This is their new hoax. We have lost nobody.
March was the month where the country woke up to the reality of coronavirus.
This morning, the number of cases of the coronavirus growing, the disease spreading.
And April has become the month where it's really sinking in.
All told, in just 2 weeks, nearly 10 million Americans have filed for unemployment insurance. Those numbers don't include the self-employed or the many Americans who've been trying to apply but can't.
Now to the economic health of the country. The Federal Reserve is taking sweeping action to try to protect the economy from the coronavirus. Fed Chairman Jerome Powell announced that interest rates will be drastically cut in one of the biggest Fed moves since the...
In case you've missed the news, we thought we would update you just a bit. Reality is none of us have missed the news. And why is that? Because we're all at home. Doing what? Watching the news, of course. 5 months ago, all of us celebrated not only a new year, 2020, but a new decade. And we did so on the heels of an amazing economy. We had the lowest unemployment rate, 3.5% in the history of our country. We had an amazing overall just landscape. It was, as they would describe on Wall Street sometimes, like a Goldilocks economy. Stock market at an all-time high, unemployment at all-time low. Oh, by the way, interest rates for mortgages at an all-time low. And as a result, the year was set up to be an extraordinary year in the United States, in the economy, and in housing. Well, as it turns out, it looks like it is going to be an extraordinary year, but for a whole different reason. See, when we started the year, it was BC, before coronavirus. And then coronavirus became a thing. Initially, people didn't think it was a big thing, but it became a big thing. And in fact, it certainly is going to be, by the time this year ends, the single event of the year. It's probably going to be one of the events of our lifetime, and it may be the single event of our lifetimes. Well, as a result of it turning out to be a thing, a real thing, a big thing, sometime in the first half of March, we decided, the health professionals, the scientists in the country decided to challenge the president of the United States to essentially induce a coma for the U.S. economy, to put us in a coma, to intentionally shut down the economy. Would have never, ever, ever, ever been possible even to think about something like that. Who would want to do that? Why would you want to do that? But this thing called coronavirus changed everything. And we decided that, in fact, we were all going to go home. Well, we really didn't decide. The government decided for us, nationally, locally, et cetera. And you all know now the story. Shelter in place, quarantine, social distancing, mask, Zoom. Lots has happened since coronavirus became a thing. We decided at Supreme Southeast, in keeping with the mission of the organization, serving others before self, and keeping with our inspiration to deliver the industry's best customer experience, that you as our customers and your customer as our customers, that we would kick into full gear News You Could Use, and we would then, on a weekly basis, until we think it's time not to any longer, we would provide you with an update so that the dynamics of this entire event called coronavirus and how it affects all of us in housing and housing finance, that we would provide a platform, News You Can Use, and information with an effort to keep you fully informed, educated, so that you could not only take appropriate action with your business, but also share that information with your buyers, with your sellers, with friends and family members. And so we did. We kicked off News You Can Use. And today we're updating you again. And there is big news. And the big news is that we have started the process of taking the patient, the US economy, that we created a self-created coma, and we are now trying to bring that patient back. That's exactly what we're doing. That process is just getting started, and there's a grand debate about whether or not we should be moving towards reopening the economy or whether it's too early to do so. And no matter where you fall on the debate, no matter which side you come out on, we're all interested in the same outcome. We want people to get healthy. We want coronavirus. We want solutions to make us feel safe again so that we can go back to our way of life. And we want our friends and our family members, we want our neighbors to be able to go back to the businesses that they built, to the work that they do, so that they can feel that self-esteem and, importantly, get a paycheck, and importantly, buy houses, right? So that's the great debate. And I'll tell you what I'd like us to do together today. Not a typical news show, but I'd like to pray for this reopening, that it goes successfully. And please oblige me, if you're not a praying type, just spend the next minute or two while I do pray to think about the things that you're currently grateful for. Even with Corona, there's plenty to be grateful for, I'm sure. But let me lead us in prayer if you don't mind. Heavenly Father, we're just reaching out to you right now. We know we're imperfect people, we're an imperfect country, and we just ask that you give us grace with our imperfection, that you would call us, challenge us to be better with all of our thoughts and all of our actions and all of our words. We ask specifically that you care for and comfort all of those family members that have lost their treasures to coronavirus. For those that are continuing in the hospital to be sick, we ask you to comfort them. For all the care workers, all of the health workers, and those that are providing services every day at grocery stores and delivery, et cetera, we just ask for you to protect them. We ask for you to be with our medical doctors, that they would get breakthroughs that would bring us back to a way of life. And we ask that when we return back to that way of life, we recognize you differently, and we give you credit for all of the blessings that are in our lives. And we offer these prayers in your son's name. Amen. All right, let's do this thing called News You Can Use. Let's get an update. We told you when the event started that essentially the things to watch were three things. One, monetary policy and the responsible party, the Federal Reserve. Two, fiscal policy and the responsible party, Washington. And three, that we should then watch what's happening in the area of health and health policy and breakthroughs. So here's how we're going. So let's move on to the Fed. The Fed stepped to the plate and they hit the ball right out of the park. They used the lessons learned, the playbook, if you will, that was left over from 10 years ago when the Great Recession was strangling our country financially. They did some extraordinary things, and this Federal Reserve benefited such that they have reenacted a number of those policies. They've done it immediately, and they have made every statement of confidence to keep liquidity in the marketplace, to make sure that the systems, the financial systems that we all operate under, the monetary policy that the Fed chaperones every day, they have kept it up and rocking. And just to remind all of you, the Fed has a dual mandate: one, full employment, and two, to manage inflation so we can have a stable and growing economy. They got work to do right now for this full employment thing. We'll get you some details on that here in just a minute. But the reality of they've done and they've taken the steps to do everything they can do. So if you want to think about monetary policy, check the box. The Fed is on schedule and doing all that they need to do, and they're going to continue to reach into the toolbox. That's the commitment that they've made. Let's move to fiscal policy. We are now, according to the White House in the last 24 hours, listening to lawmakers have informal conversations. That means politically that they are negotiating a new relief package. We've already had several of relief packages, stimuluses take place. And there's been a lot of debate about the effectiveness and the systems working and making everything available, et cetera. But listen, the PPP, the Payroll Protection Plan, has really benefited a lot of businesses where they've received money. As long as they use those dollars to keep their labor employed, they won't have to repay the money. So that was a brilliant idea, imperfect in execution, but let's face it, they're doing this as we are in the middle of this dynamic event. Separately, there's been increases in unemployment support benefits. People have been getting additional unemployment dollars, so much so that in some cases they're making more money than they were making prior. But those are just the details. The truth is we put a lot of money, almost $3 trillion now, back into the economy because we shut the economy down. So we've shut down cash flows coming from typical consumer demand, and we've now replaced those dollars as people have been unemployed with a variety of different stimulus. So check the box. Fiscal policy, Washington, believe it or not, argue as they might, got their act together, and we've gotten effectively now work done such that those two boxes, monetary with the Fed, fiscal with the government, they've actually done what they need to do. And we're talking about getting back to recovery, right? Getting this patient to actually be fully recovered. What's holding us back is really coronavirus itself. So we said there were three things. Check the box with the Federal Reserve monetary policy, check the box with fiscal policy and Washington. And now what's holding us back is we do not yet have a final answer, and it may be another year or so before we have a final answer on coronavirus itself, known as COVID-19. Testing has improved, tracking has improved, treatments are in development, and so is a vaccine in development, but we don't yet have, and we're not quite where we need to be, but we have made progress in the last 60 days on all these fronts. There's a test right now for detecting coronavirus, kind of a new test that just came out that could be used in mass ways. So we're now getting breakthroughs in terms of the availability of testing on an absolute basis and the ease of testing. So that is substantially improved from where it was just 2 months ago. Altogether, we were working to flatten the curve. If you remember, that was the most important thing so that we didn't overrun our health systems. Well, guess what? We have flattened the curve. In fact, today's news is out of New York. And relatively speaking, let's face it, there's still a major problem, but we've made major progress. The governor of New York, Cuomo, has basically said as of today that hospitalizations, deaths, everything is back down to where we were kind of at the beginning. So we've made massive progress in ground zero, if you will, which was New York City. And around the country, for the most part, we're seeing improvements take place. And that's why the conversation about going back to work, that second issue, is effectively important, because we need to get the economy back up and running again. It can't continue to be in full shutdown mode for all the reasons that we're all familiar with. And we'll get to some of that data here in just a few minutes. But in terms of the rationale, and again, it's a debate, it's a fair one to have, but the truth is that I think we all want to go back to work. And whether we all go back physically or not, we all want the economy to work again. I mean, it puts people in jobs, makes them feel good about the services that they provide and the products that they build. So here's why we're doing it. Florida's numbers, if you see April 15th, that week, they were averaging a certain number of cases. They're almost half of that now. The state of Georgia is down to about 25% of the number of cases. Georgia, if you all will remember, was the first state in the country to announce that it was going back to work. And of course, when they say going back to work, that's not every business at the same time. And it certainly isn't back to the way it used to be. It's a version of the way it used to be, but it's not absolutely, and that's for certain true in bars and restaurants, et cetera. So, but we're at least making the first move. And by the way, that has created a rally on Wall Street. We've seen Wall Street stock levels recover a substantial amount on the hope of this go back to work kind of idea, and that it works. And that's the most important thing. We need this to stick. We need to get back to work. We need to do it in whatever version or capacity that we currently are going to go back in. And then we need to see that hold and these cases continue to decline. And then we can make additional progress towards normalcy while we're waiting for finally a therapy, a vaccine, or a combination of all of them to come together and to get us to a point where we can really say, hey, now we all feel safe going back to business as usual, our way of life, please, right? That we could get back to doing that. And it will be, in fact, however, some time before we get a vaccine. And even then, a vaccine doesn't 100% of the time protect. But the combination of a vaccine, the combination of additional testing, the combination of therapies that are being used to treat coronavirus patients, we are hopeful, and I fully expect we're going to get continued progress dynamically here in the weeks and in the months ahead, and all of that will give us a pathway for this road to recovery to finally take place. Let's go ahead now and talk about the economy. We said that if you want to track the economy, you track employment and track retail sales. Retail sales is nothing more than receipts that are either services or products being bought from any number of different companies in any number of different industries. And so we release, the nation does, retail sales numbers once a month. And that number is always incredibly closely watched by economists to determine what the strength of the consumer is. And by the way, 80% of our economy is driven based on consumer behavior, consumer demand, which is retail sales. Unemployment claims and the unemployment report, we knew that these numbers, we knew going into the month of April that April and May's numbers were going to be, well, let's just say extraordinary, and they did not disappoint. Retail sales for the month of April reported in April. These were March numbers. And keep in mind, we really just shut down for half of March, a little bit more than half of March. So this doesn't represent the full impact of sales in the month of March. We expect these numbers will continue to stay depressed until we get into likely July, which will reflect June's activities. Actually, the thinking is March, April, and into the middle of May will be the weakest period of time. So all these numbers are going to reflect those the worst of the scenario, including housing when I get to that in a few minutes. But retail sales were down 8.7% in March. And just listen, the news is going to be in and around sales and all types of businesses. Interesting. Nordstrom, one of my favorite organizations, decided to close 16 stores as a result of this event. So they may have been weak stores to start with, and now coronavirus has just made them a casualty of the moment, unfortunately. The bottom line is that these sales, the money exists in the hands of consumers for the most part, either through unemployment that they're collecting or through the PPP program or the special stimulus that was sent out. The money's there. It just isn't operating normally. We're not going to concerts. We're not going to ball games. We're not going to bars and restaurants. And so that's where the sales impacted the most. And of course, as well, the retail industry. And that's why Nordstrom is doing what it's doing. And of course, they're one of the finer retailers in America. So you can imagine what's happening. If it's a struggle at Nordstrom, it's a struggle everywhere. Let's move to the unemployment numbers. We knew the numbers were going to be shocking. Keep in mind, we started this year with a all-time low of 3.5% unemployment. There's 160 million Americans that are available to be employed. So we're talking about only about 4.5 million that were actually out of work and really wanted to work to start the year. That 3.5% went to 14.7%. That was reported the first Friday of May. So this is actually the unemployment number for the month of April. The reality of it is that that number is likely to go higher again next month. And the claims number, which is really another flattening the curve. If you remember last week, we were talking about we have to get claims just like Corona to flatten and then go down. We are seeing that. Unfortunately, still way too high. We've had some 30 million people claim unemployment here in just the last 6 weeks. So we'll look for these numbers, the unemployment claims numbers, which comes out every Thursday. And again, the unemployment number for the month comes out once a month, but the claims come out every Thursday. We'll report next week. Hopefully the lowest number we've seen in 6 or 7 weeks. That's what we expect. One of the challenges with the stimulus plan is that the unemployed, a lot of those that work in service level jobs are actually receiving more money to be unemployed than to be employed. And so there's been some question as to whether or not that would keep people from going back to work. Ultimately, they'll change the way that that employment check gets sent out to encourage people to go back to work. But I think even under that scenario, when people look long term, they would rather have jobs than not. So I think that will get resolved here coming up soon. I want to just address one other point, major point with regard to employment. The employment report that came out suggested that during the month of April, and again, we lost jobs in March. Only April is 20 million jobs, only 20 million. One thing that did come out in the report, however, that kept people pretty optimistic, that is the economists that track what's happening is that better than 75% of the 20 million that were unemployed in the month of April, better than 75% of them were actually furloughed. So yes, they're unemployed, but the furlough quotation attachment suggests that the employer has every intention of bringing them back. So that's kind of a big deal because that says that we can quickly see unemployment go back down, assuming we get back open. And again, if you're not an advocate for us reopening, pray for it anyway that we get good data, because it would be great if we could reopen, wouldn't it? Of course it would be. Whether or not it's the wisest and right thing to do, I don't think anyone really knows with 100% conviction the outcome of this, but let's just pray for the best, okay? So let's not worry about who's right in this. Let's worry about what the outcome is that we all want as Americans, and that is to be able to go back to our way of life, which means we're going back to work. It does report, this past employment report, that we now have the employment number, the worst rate it's been since the Depression. So we're talking about 100 years. So we went from a 100-year low unemployment rate in January, and then this thing, coronavirus, happened, and now we have the worst employment. That's unbelievable in a 5-month period of time for an economy that is typically as stable as the U.S. economy. Let's move on to the shape of the recovery. This is actually a pretty fascinating concept. So what has been floated, 4 ideas that the economists are all debating right now about our recovery. Keep in mind, we all want V. That's what we want, victory. We want it to be victory, very, very good. V, that's what we want. What that looks like is we're at the bottom of the V right now, and the other side is climbing out of the economic event that we, in fact, self-induced ourselves into. So the hope and the prayer is that we have that amazing recovery, because we've had an amazing rundown, like I just described to you, in retail sales and employment, arguably the 2 biggest things to track about the economy. Well, we hit rock bottom, all right. The worst numbers in history now, following the best numbers in history right before it. And we're hoping to get back to those best numbers. So that's the V shape as you hear about it. The U is we go down, we're at the bottom now, and it just takes longer, and then we ultimately come out of it. Better than the L, but not as good as the V. The L, let's just say that's the last thing we want. That is, we go down, we're there, and then we just stay there. That's the last thing we want. And then finally, there's this Nike swoosh. And how does Nike get to advertise in the middle of this whole process? I don't know, but it's been floated out now by apparently some Nike fans that this is another alternative path in terms of the recovery of our economy. That would be the swoosh. All right, so again, back to reopening the economy. We have our interest focus, that is the folks that are checking in today, are on 3 different areas, and that is the Florida Georgia and Carolinas. They're all versions of what's taking place today. And again, we really need this to work. But let me tell you the debate. I said earlier, there's some debate going on. This morning, Tesla, run by Elon Musk, who is a bit crazy, I think, crazy smart and also crazy. But anyway, he is now debating California, who is requiring him to stay closed. That is his factory to build cars. And he's threatening to take his company factory and move it out of California. So that's the kind of friction that's existing. One of the economists that it was in a previous administration has suggested that if we open, which we are, and we have to reclose, which we'll pray we don't have to, we could see, let's just say, not a very good environment. He called it a depression. The bottom line is then there's all these folks that are out there that are actually, protesting because they want to go back to work. And then there's the, what about safety from the unions asking about their folks, and there's a debate on that. So there's obviously a lot of issues going on this topic in terms of returning to work. But look, it's not a one size fits all event. Let's talk about reopening the economy. It isn't a one size fits all event. It's a state by state. Certainly New York City, a place me and Lisa absolutely love. We go every Christmas. The reality of it is that they're not in any way ready to reopen their businesses there, not yet. But they're not necessarily it's not the same everywhere, and every single governor, and that's why I think it's very important that the governors get the opportunity to run their own states. That's what they're responsible to do, and this would be a perfect and classic example to let them do their work so that we don't govern a one size fits all event. Testing, treatment, vaccine, they'll all help, but they won't help today solve the concerns that exist. So we're going to have to kind of do business not as usual until we can get testing, treatment, vaccines to get to a place where we can get back to business as usual. But even when business is open, and this is the question, will all the employees return? That's a good question, right? Some will be more risk adverse and maybe not. And then when the business is open, will all the customers return? We hope so, please. We need them to return. That's what we need. We need people to get back to doing business as usual. It'll be faster for some industries than it will others. But the objective is ultimately to get America back fully employed again, like it was when we started this year, 2020, this new decade. Employee and customer safety, like never before. We will be cleaner than we've ever been. I guarantee you that. This will be the cleanest this country has ever been in terms of the workplace environment. That's for absolute certain. I can guarantee you when you go to restaurants and look at that health number, well, let's just say it'll probably be more prominent going forward. And let's just say the benefit of the doubt will not go to the proprietor of those food businesses. They better get it right, because they're only going to bring customers back if they do. And then some businesses will in fact be changed forever. Some will, of course, unfortunately no longer exist because they just would not have been able to get through this, but some will be changed. And you know what we're focusing on at Supreme South? We're focusing on what can we do during this period of time as we're forced into virtual Zoom changes. How can we leverage that for what's good long term? What do we bring with us out of this that makes us better? That's what adversity should do if it's approached appropriately, and that's what we expect and intend to do at Supreme. Let's talk about now housing finance in Supreme Southeast. The states reopened. This was an article came out today, very much in keeping with the anecdotal data that we're seeing as our business. Home buyers are rushing back out. Sellers are staying on the sidelines. So, hey, this is a really good thing that home buyers, in the midst of all the data that I just shared on the employment, that there are still people out there that want to go buy homes. If sellers are staying on the sidelines, they don't want necessarily people in their house. Every day we get a little bit better in terms of the curve, not only flattening, but reducing. And I showed you data that says that we are getting better, in fact, even better in New York. So as that happens, sellers will come back to the party and will reconnect with these home buyers who are coming out in droves right now. We're actually seeing, we saw a downturn predicted by Doug Duncan when he visited with us on forecasting. We'll go back to that here in just a few minutes, but we're seeing an improvement in contracts actually getting consummated, getting signed. Here just in the last 2 to 3 weeks, we've seen a pretty substantial improvement. The finance issue, we said from the beginning, this forbearance, not forgiveness, forbearance, not forgiveness. Forbearance is simply when borrowers don't feel like for any number of reasons related to coronavirus that they can make their payment. The CARES Act, which was part of the stimulus, or as part of the stimulus, the CARES Act, within the context of it, offered consumers for government-backed loans, which is almost all of them today that we make. It offered them forbearance so that they could either take 3 months, 6 months, or a year and not pay, and then you don't get to get forgiven on that. It goes to the back of the loan or it gets fixed into the loan over time. It's up to the servicer to decide that. But that created some credit concerns. That in tow with the 14.7 unemployment number, the credit markets reacted. A couple things happened. Jumbo investors basically left the industry. There are still jumbo dollars out there to be had, but you have to have more money down and a better FICO score than just 3 months ago to be able to get access to that jumbo money. And then in terms of the general population of buyers, FICO score has been under pressure because of this forbearance issue. And I shared with you that the forbearance issue created a lot of the concern around credit beyond the unemployment number itself, the absolute idea. And the reason being is really simple. When borrowers pay the servicers on their mortgage monthly, the servicers keep some of those dollars to profit on the servicing. They are scheduled and structured how they're to keep that, so they don't make more or less on an individual customer. They make the same amount on all the customers. The bottom line is that when borrowers don't pay because they're in forbearance, the servicers still are required or were required to advance those payments to the Fannie Mae investors, Freddie Mac investors, FHA and VA investors. And so that was putting a significant capital liquidity squeeze on servicers. They begged for relief. Finally, we've got relief for both FHA, VA loans and for Fannie and Freddie. They're going to be covering materially covering those advances, which should temper additional credit changes that take place. So we should be at this point on the other side, flattening the curve in terms of changes on the credit side, right? We should be on the other side of the mountain now, relaxing. I don't think we'll see everything go back to the way it was for some period of time, latter part of the year, but I do think we've, for the most part, seen the tightening of credit that we expect to see. And again, it's causing, challenges in the credit markets with both jumbo and with credit scores themselves. Let's move on to, as a result of the credit score issue, let's move on to what we're doing at Supreme. Our interest is obviously to pay attention to what's happening. And then, of course, with you as our partners and our end user consumers, what can we do to help? And so we decided that there was something that was sitting right in front of us, obvious to do. Late last year, we had the great privilege at Supreme to be able to hire Lisa Myers. And Lisa is a career credit expert, a senior executive at Credit Technologies with a vast amount of mortgage credit experience specifically. We hired her so she could do continuing education training for you, our treasured partners in the real estate community. Well, as it turns out that she's here, now we have customers who need to get their credit scores higher so they can maintain their status as home buyers, that they would actually not be locked out because of credit score increases. And then the second part of it is we can save them money simply by training them. So every Friday now, starting 3 weeks ago at 1 o'clock, we run a program, Lisa does, called Credit Essentials for Home Buyers. And she does a macro view on credit. Essentially, she basically opens up the black box and tells customers in general what they can do to improve their credit score. So that's available to all of your customers every Friday at 1 o'clock. Hey, guess what? 3 weeks, excuse me, we started our first Credit Essentials. We had 130 customers, and we've had on average over 100 customers every Friday, and we'll continue that program now. That's going to be one of those things that after Corona, we're going to continue with it. Why? Because look at the screen. On a $200,000 loan, if you can take your credit score from 640 to 680, 640 to 680, 40 points, and it's not that difficult to do that. You can save 1.5 points on a mortgage. On a $200,000 loan, that's $3,000. $3,000 simply by going to our Credit Essentials. We're not guaranteeing you're going to get that much improvement, but it's very likely. And then we also provide individual plans. All you have to do is have your customer ask LO that they're associated with to work together with Lisa, and on behalf of the customer, we'll get an individual plan in place that if they follow, will help them get their credit score higher, save them $3,000. Oh, by the way, that's not all. That is $3,000. But if they went from a 660 to 700 credit score, 40 points, which we believe is very doable, they're also going to save on private mortgage insurance, PMI, over $100 a month. So we're talking about an awful lot of money that customers are going to save, $4,000 in year one, simply by spending a half hour of their time and then working with our folks to work with the consumer. And that's when they're out looking for houses over the month or 2 months before they get under contract right away. They can improve their score so we can help consumers. So not only do we help by making sure they stay in the group of people that can buy homes going forward, which we need all of them, don't we? Of course we do. But they can do it also less expensively, which those two things together, we think make an amazing benefit take place. And again, this is the adversity of Corona brought us to a point where credit scores are changing. We are looking for ways to get better as an organization, and we found a significant way to get better, as I just described, and we're taking it with us, and we'll move it downfield, and hopefully we'll be more valuable to you and to your consumers as a result of what we're doing. Let's talk about Fannie Mae and the housing forecast. We had Doug Duncan on last week. Doug shared with us that this quarter, Q2 in 20, would be the lowest quarter that we would have. So this is representing, just like retail sales, just like unemployment, we're at the bottom right now of the V, if you will, right? So we went from a great first quarter, one of the best quarters we've had, well, actually in 15 years, and we were expecting it to continue to climb. Well, it didn't, of course, because of this event called Corona. Here's the good news: Q3, Q4, and then all 4 quarters next year, we're going to see increases in demand and increases in contract sign and, most importantly, closings. So good news for us right now, which is that we're in the low part and on our way out. Hopefully it is a V-shaped and we continue to see this number get updated. I'll have an update for you next week as Doug updates his forecast, but hopefully we'll see these numbers improve even more than what it looks like once we get out of Q2 here into 3, 4 this year and into next year. We hope to see further improvements next year. Let's turn the page anecdotally and get some data on Supreme. What are we seeing right now? Well, to the left of the screen, credit pulls this month. Interesting, the absolute demand is going through the roof right now, which is a great news story, and I'll get to that in a second. But of the credit pulls so far this month, almost 50% of them are under 700 on their credit score. And more importantly, 20+% is under 640. So technically today, with almost the entire lending community nationally, they won't qualify under 640. So there's a lot of demand, good news, but the demand is showing us that credit scores, which by the way, in a weak economy do go lower. Well, we can reverse those trends and make sure that that number of folks under 640, if they're at 620, we get them up to 640. Now they're in the buying world again. That's what we want to do. So as I mentioned, Lisa's going to be providing Credit Essentials every Friday at 1 o'clock. Check with your Supreme Lending loan officers will give you the information. On the other side, credit pulls, purchase to refinance. I want to show you something. When you look at April 20 all the way to the right, we have 1,800 credit pulls in the month of April that were purchase in nature, meaning customers that you referred called us and said, hey, I'm curious about being able to buy a home. And we pull their credit for the first time to give them a pre-approval letter. That's what that number represents. You look back at April of last year, we had 1,400, just under 1,500 credit pulls. So we're talking about demand is up almost 20% year over year. So if we don't have the contracts today, what this is telling you is that they're out there to be had. We just got to make sure they get their credit score higher so we can fully realize the potential of what we're describing. And one other point to note here, our refinance numbers of 27%, the demand for refinances, that's the complete opposite of what you'll see at most lenders. Most lenders are 80% refinances, which is one of the reasons they don't do purchase service so well, because a refinance lives in the home, the customer does. So there's no absolute day and time they have to close. We all know that's a bit different on the purchase marketplace. So our focus has always been your business, tailoring our every service activity to your business and your customer's business. That's why we execute at Supreme the way we do from a service standpoint, which we believe the inspiration to deliver the best customer experience in our industry. It's why we believe we do it, because we are fully focused on it, and the numbers tell you that. So this is good news. Demand is picking up right now. All right, let's talk about Supreme Rescue Service. You probably have some loans from time to time. We know you do. We have story after story of you sending us those, and we have this rescue service where SRS, you see it around your offices. Well, once upon a time, you used to go to your office. Maybe you'll go again. But anyway, we offer the Supreme Rescue Service. If you have a loan on a listing of yours, or if you have a loan that was referred someplace else for any number of reasons, it gets in trouble for any number of reasons, simply refer it to a Supreme LO, and we'll get a quick look at it with our very best, the top surgeons in the mortgage business that work for our organization. And if we say, yes, we can get this done, Supreme Rescue Service will go to work. And what will happen next is we will deliver the industry's best service, customer sat rates at 98.3. We will close the loan on time every time to make sure you get paid on time. We do that 99+% of the time, that we close on time and fund on time, so we can get you paid on time. We know that matters, especially now. It always does, but especially now. And finally, we can do it in as little 8 days. We would do it faster, but the government won't let us close any faster than 8 days. But we do that on loans that don't need Supreme Rescue Service. But if they do, we can get there in as little as 8 days. And I want to remind you right now, as we're sitting here on May 11th, we are still open for business to close this month. That's right. If you refer us a contract customer today, we're totally comfortable to get it closed this month. We will, in fact, continue to be open to close this month throughout this week and into early next week, up until there's 8 days, business days left on the clock this month. I wanted to finally tell all of you that where I'm turning in this time is to deepen my relationship at home with my beautiful wife. I'm turning to be more appreciative of the little things that were BC, before Corona. And I'm also filled with hope for the future, not only for the economy, but I'm filled for hope for the future to get back to our way of life. And I just hope, like me, you will deepen your relationships and improve them at home, and that you'll be optimistic and a part of this whole recovery process, and that you will go out with your dollars to support people that are going back to work, that desperately need our support, because that's what it's going to take for the road to recover to take place. Of course, we need Corona itself to get a health solution, but we need all of us, every single one of us, to be optimistic so that we'll go back to safely business as usual. And I'm excited and looking forward to doing just that. Thank you for taking the time to join us today on News You Can Use. I hope it was beneficial to you, and I hope it's beneficial for your customers. And we'll see you next Monday at 3 o'clock.